Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively quiet start to the week. The euro's pushing up a little bit towards these highs. Not anything too dramatic, but like I said, it's a relatively quiet start. As far as economic news, we had German industrial orders come in. The Reuters poll was up 0.4. It was actually up 0.3. Okay, the prior had been a negative, so a little bit of a positive there. And you can see here we do have Centix index at the bottom of the hour, and other than that, it's relatively quiet. For the start of the week, we do have further data. As we come into tomorrow with housing starts here with Canada, Mexican CPI, JOLTS job openings. Then Wednesday will be are going to have PPI for China, but on Wednesday we'll also have the FOMC minutes, which will be very, very key. Then we have some UK GDP towards the end of the week, as well as CPI here in the States and PPI. But we also have some Fed speakers. But like I said, to start out for today, relatively quiet, as I mentioned here, with the German industrial orders and then Centix index. And here in the States, relatively quiet session and not really expecting a whole lot. I actually... Blake was out, as you know, this week or for a good portion of the week, and so I covered the week ahead video, and my thoughts on that. We pointed out not only the economic reports, but also the FOMC minutes and the different Fed speakers. Now we do have Powell, who'll be making his testimony in front of the House on Wednesday, and then the Senate on Thursday. So we do have some potential for the dollar to go on and, to whip around a bit. We're going to get into that. One of the things we're looking about, and we mentioned about the dollar, we had a good, recovery here, and certainly a good move here off of the NFP. But I thought a lot of it was positioning in the sense that, and you see that more clearly with the euro, is that we lost that 12.62, and I think that it was basically, kind of like, as I mentioned, a throw in the towel kind of move for the euro. And so, but we've seen the dollar kind of pare back for that. And as we get closer into Powell's testimony on Wednesday and quite a few Fed speakers towards the second half of this week, we have the potential, as I mentioned, for on the video, Fed tape bombs. I think we'll probably see this come back in. And one of the things I mentioned on the video was, if you look at the moves that we had over the last couple of months, we see a big move here, and then we turn around and come back in. We see another move. So now we go to brand new highs and we come back in. One more little pop, and then we come way off, only to come roaring right back and then turn around and lose and make new highs. After the same thing here, where we came back here, pull back and make new highs. Here we are. We come back here and make new lows and try and rotate back. And so I think this week may be a microcosm of that as we kind of go back and forth, and so we could end up seeing the dollar kind of pull back in a little bit. We shall go on and see, and I think it's as you see here with the euro, losing that 12.62 was very, very key. I'm talking about that with Steve on the Face webinar, and that was pretty key for it to lose that. But like I said, do I think that the dollar will make new highs like right now? Not necessarily. We could at the end of the week. Like I said, we have to give the dollar the benefit of the doubt. but we have to get through that PPI and CPI data and Fed speak. The thing is that as good as the NFP was, and certainly outperformed what the expectations were, the key data was the hourly wages, and they were expecting 0.3, which that would have been within reason, to be honest with you. But it came in at 0.2, which was a disappointment. Now, if it came in at 0.4, I think basically to shut down potentially any rate cut talk. But we came in at 0.2. That was a disappointment. But like I said, I think that this technically the market was just going to push them down quite a bit here, and we certainly did. I mean, we were already moving lower with the poor German data that was on Friday, and obviously this had a lot to do with what we had seen as I mentioned, just as a recap, the all-time highs here in the Bunds, which will equate to new all-time lows in the Bund. And that certainly is what got the euro on the back foot when we came in last Monday, a week ago. Then we continued to see that euro slide, and then that was certainly added on to by the nomination of Lagarde for the ECB chief. So it really had the euro dollar really on the back step, I should say on the back foot, right from the get-go of the week, and just continued. And like I said, so I mentioned the data out of Europe. Obviously, it's been weak, and I've been trumpeting that over the last few months. But the data over the last month, I have to say, almost a month. For the eurozone has not been that bad. Hasn't been great actually, and sometimes France would lead a little bit, and surprisingly, Italy. I mean, just performing just a little bit better than what expectations were. But the German data, that has just been, like I said, absolutely dismal and abysmal. So that's what's really pressured this euro and has driven those Bund rates to new lows. But I think, like I said, this week we kind of might be back and forth in a little bit within a very, very tight range. I'm talking about the cash dollar index, and we'll see what Powell goes and says. But certainly I think we're going to have a rate cut, and then we'll see how that impacts the dollar. If we get how those inflation numbers come in at the end of the week, certainly could go a long ways towards either defanging the teeth of the potential rate cut or opening up that we will solidly go on and see that. So with that, let's just go on and we'll just go and take a quick look at the news. New PM for Greece as Cyprus is punished for austerity. Early results out of Athens suggest conservative Kyriakos Mitsotakis will be Greece's next prime minister, ousting Alexis Tsipras after 4 years, which I'll accept and ultimately face punishment for a painful EU-enforced austerity program. Mitsotakis will be sworn in on Monday on a promise to cut taxes and chase growth via higher investments, but he'll find his room for maneuver no less limited than it was for his predecessor. Although it's in the end of the Tsipras era, the reality check for Mitsotakis comes in September, when against a backdrop of still crippling debt and unemployment, he is expected to outline the contours of next year's budget. There's plenty of talk about Westminster lawmakers about ways to halt a no Brexit deal, but it's failing to impress employers. A survey of chief financial officers released today shows that British companies are more worried about Brexit than any other time since 2016 referendum, and plan to reduce investment and hiring as a result. The survey conducted by Deloitte found 83% of the CFOs believed that leaving the EU would hurt the UK's long-term business environment. Almost two-thirds expect to cut hiring in the next 3 years as a result of Brexit, and 47% expect to reduce capital spending. Moving on to the markets. Heavy world markets are judging a series of new plots. First thing, another Fed rethink of post-payrolls. Turkey's chief bank ouster and Deutsche Bank's downsizing. Morgan Stanley global equity downgrade, and a win for Greece's center-right New Democracy Party in Sunday's election. With the little fresh optimism on the rekindled U.S.-China trade talks, the scaled-back Fed rate cut view after the above forecast U.S. payrolls gain dominated. As they await the Fed Chair's Powell's semi-annual congressional testimony on Wednesday and Thursday, futures markets now see little or no chance of a rate cut of more than 25 basis points later this month. And there's anxiety Powell could throw cold water on pricing for as much as 75 basis points of easing by the year end. Although the headline payrolls gain flattered other parts of the report, including a rise in unemployment rate and subpar wage rises, it was enough to jar markets already edgy about overpricing of the central bank easing ahead of Wall Street stocks dialed back from record highs. Morgan Stanley's decision to downgrade world equities to underweight the ahead of the earnings season, meanwhile, reflect his belief that the global economic downturn is well entrenched, regardless of the trade war, and the central bank easing would not be sufficient to offset its impact on share prices. The trading gloom was compounded by Deutsche Bank's announcement that it was eliminated whole swaths of its equity trading business as well as some fixed income operations as part of a swinging downsizing investment bank involving some 18,000 job cuts overall. The well-flagged restructuring of Germany's biggest lender did not involve new capital raising, and Deutsche shares climbed more than 5% in pre-market trade. Let's see. Now let's go and move on to the dollar. Dollar near a three-week high and U.S. job gains weakened case for a big Fed cut. The dollar rose rapidly or broadly on Monday after strong U.S. jobs growth in June suggested the Federal Reserve will not aggressively cut rates later this month. U.S. non-farm payrolls rebounded in June to 224,000. The lowest in 5 months, data showed on Friday, beating economists' consensus estimates of 160,000. The solid outcome virtually wipes out chances of a half-point Fed rate cut at the end of July, but modest wage gains and other data showing the world's largest economy was losing steam could still encourage the central bank to cut rates by 25 basis points. The dollar index climbed to as high as 97.44 on Friday, its highest level since June 19th. The index, which measures the greenback against a basket of currencies, was last quoted at 97.21. The common currency came under pressure on Friday after data showed German industrial orders fell far more than expected in May. And the economy ministry warned that the sector of Europe's largest economy is likely to remain weak in the coming months. There's no great urgency for the Fed to act, and surely not by half a percentage point, says Mark Chandler. As traders focus quickly to Jerome Powell's congressional testimony on Wednesday and Thursday, Chandler said it might be too late to persuade the market that the Fed will not cut rates now, but Powell can lean against the idea the Fed will cut rates by 75 basis points this year by emphasizing the still robust expansion, strong financial conditions, and perhaps couching a cut in terms of insurance. The British pound hit a 6-month low to the dollar on Friday after poor economic data and a rise in expectations the Bank of England will cut interest rates. Better than expected U.S. jobs data sparked a rally in the dollar, adding to sterling's losses. So let's go and move on to the euro. There we go. So looking at the euro, it says the euro closed below the key level of 1262, opening a test for 1180. The market needs to close above 1285 to neutralize the downside move. Shorts to be initiated and move back to 1285. And I mean, obviously 1262 is key, but where the rubber meets the road is going to be right there at 1285. If we can get a close above 1285, then that would go a long way to, the market kind of questioning the move lower. And I think, like I said, we may see the market kind of go back and forth in this area. I guess for starters for today, we could just go keep it relatively tight, which would be 1262, but the key will be 1285. So tell you what we'll do is, sorry, this flips now to bearish. That would be key. 1262 is key on the daily, but it'll be 85 if the market, and that's where I think traders will step in and try and take the other side more aggressively at 1285. Support. I'll go right here at 1199. 1199. And we'll move into the cable. This is an area where we're potentially looking for this market to drop back down to is this 2485. We had 2526 here on the short haul, but we thought this market could make a run. That's where it ran to. And once again, it's just a technical target that we're looking at. You can see running the level right across the bodies here, and they made a run down here to 2485. That's going to have to be the support right in here. This is 2485. And let's see here. Cable's reached a support level 2485 on Friday. Pressure remains. A daily close is needed above 2608 to quell further momentum. A break to new lows would target 2374. So we're looking at 2485. Although I think the dollar, like I said, may give up further of its gains as we come in closer. As I mentioned with the cash dollar index, we've already reached. I think a lot of this move was based on positioning. Now, certainly the jobs report warranted it, but with the risk of Wednesday with Powell testifying and Thursday, and then all the Fed speak, the dollar's more likely to come in a little bit from those gains. Like I said, once we get past the end of the week and get past CPI and PPI, then we could have the dollar maybe making a new move to higher highs, but that is to be then. For until we get towards the testimony, we could see the dollar pair back in, I believe. Looking here on the upside, let's take a look on the 2-hour chart. Right there, 25.94 for right now. Still a ways away, but you can make the case a little bit lower, but we could quickly hit some stops. So it's actually going to be 25.94. We may not even see that if we do see that for, maybe at the earliest till tomorrow, but that's where the resistance will come in. Moving into the Aussie dollar. The Aussie has once again paired back from the major level of 70.27. Key support comes in at 69.44. A break below that would open the door for 68.31. Well, we had opened up the week, remember, right here at the 70.27. We did back. We made another run, and we had the opportunity, if we would have closed above it, to move up here to 71.23. And we slid back. So this key support, 69.44, is what we'll be looking at for bias chart support. I had that already in place. And once again, this key level coming across. We know that's been key for quite some time. You can see that. Look how far that goes back. We pointed that out several times. Look at that, how key that 70.27 is. And why it's contained the market. It's it's key on the way down, we remember here, and obviously key on the way back up. As we know, support becomes resistance once you break it, and that'll be formidable. But on the short haul, it's still bullish. And you can see here we've got the EMAs. Why I thought that on any pair backs, look for traders to come in and step in and defend that. Let's go and move into the Kiwi. The Kiwi has shed its gains in wake of the NFP, closing just ahead of the key support of 66.12. Confluence went 50% back at 66.02. EMAs remain in a buy mode, so the pair should be well supported on the test of new lows. Pair needs a close above 66.72 to regenerate the upside momentum. So 66.02 is also the 50%, and here's that 66.12 right here. We're certainly defending it well right from the get-go. But we'll go with 66.12 here, although we know 66.02 is a 50% back move. So. Resistance is going to be right there, 66.91. You can see that coming across. Let's go and move into the dollar CAD. Well, on NFP day, this is our buy chart support here at 30.43, and I discussed that with Steve at the time, right before the report, and it certainly ended up holding. And like I said, this is just all about the touches. From way up here, we were looking for a move potentially down to 31, with 31.36 a key level. We certainly overshot that from the prior week, not this week, but the prior week before then. We made a run back up, and we turned around and rolled back down. And why I thought that the market could hold this 30.43, thought it might even overshoot a little bit, but we did see it hold well. And look what we ran right back up to, 31.36, before the market has quickly faded back. Obviously, the potential is that this market can work a little bit lower, but this is a pretty good value area here. We do have the Bank of Canada rate decision on Wednesday, so certainly that's can make an effect, have its own effect. For the meantime, we're just going to stick with this 30.43. The market may keep itself in check until we get past the Bank of Canada rate decision. So we'll stay with the 30.43 on the upside. Let's go to the $2 chart. The short-term basis is going to be right there, 31.05. And let's go move into the peso. You can see it's relatively quiet. We were looking for that kind of start for the beginning of the week. So the dollar peso remains mired for another week in a range of 19 to 1923. Basically, it's 1923.6. You can see that. A daily close below 1892 will allow for a challenge of recent lows, 1865. Immediate resistance is 1913. So if we do break low here, this is the key level right here for right now, 1892. But we've been trading this 1901 or 19 even, I should say, to 1923.6. You can see it's been just basically very, very quiet for the last 3 weeks. We're going to go and put the support here at 1892. 1892.5 is actually the next key level, and as we start the week, 1896 is like I said, is support for right now, but we want to focus as we start the week. And like I said, if we press below that, this is key. This is basically the last line of defense. A close below this 1892 opens a test down here for those to challenge those new lows at 1865. On a very short-term basis, we did mention 1913. If we're looking on an intraday basis, let's go on and get something a little bit closer. Well, there's the 1912, but on a very short-term basis, it's going to be right there. 1908. Let's move into the dollar yen. The dollar yen rallied on the NFP report, but a daily close above 876 will be required to challenge the pivot of 927. A break and 2-hour close below the downside support of 778 will target a move to 716. You know, we're trapped in here. You know, when we started out last week, we were looking for a high as we came in from the weekend of 858, and the high was 854, and then we rotated back and here we are. I think we were just kind of stuck in no man's land. I've been mentioning this, I think, for the last couple of days. I don't really have a good take here on what the dollar yen's going to go and do at this point. So we've come back up in here. We pushed a little bit higher probably than what somebody expected. We have slid back just a bit here. To me, the key is right here at 8, right there at 876, and we'll go with that for the resistance. And support's going to be here at 778. And I think we're just going to bob around within that area. Although I think there's a bit of more of a risk for us to move, as I said, lower here, to work a little bit lower. Same thing as I mentioned before, is I think as we come into Wednesday, we've already made the push in the cash dollar index. And I think he knocked a lot of people out of the box. So, and I mentioned that in the webinar, are people going to say, okay, now I'm ready to buy the dollar right now, right at these highs, I'm ready to buy the dollar? No. So I think the risk is to pair back in, as I was saying on the week ahead video. But you got to give the dollar the benefit of the doubt. So we can pair back in a bit. Who knows, by the end of the week, we get past the testimony, we get past Fed speak, get past CPI and PPI, we could be pushing new highs, but we shall see. For right now, going to the cash dollar index. Dollar index closed above the broken trend line on Friday, but just below the key resistance level of 97.31. Index needs to close above this key level to generate further upside. Support comes in at 96.73. So on the upside, it's 97.31. And right here, 96.73 for support. I don't think we're anywhere close to endangering that today, and maybe not even for tomorrow, maybe towards Wednesday, but that's where the key support. In the meantime, like I said, we may just kind of bob around here. Same thing we were talking about with the yen. With that, let's go and move into the cross rates. Kid says the Kiwi yen is holding key support at 71.77. EMAs are in a buy mode, and the pair will find buyers into the 71.45. Immediate upside resistance is 72.47. You can see the importance here of the 72, but it's really here at 72.47. We're going to see some real resistance. So let's go in and mark that for 72.47. And we're actually going to change this because the EMAs have been holding up. Just bullish. And we mentioned about the 71.77 here. And that's going to be our support. Let's go into the euro yen. The euro yen is hanging on to support by a thread at 21.71. A daily close below 21.50 targets 20.74 for starters. Pair needs a close above 22.30 to slow down the downside momentum. So you can see here we're in a relatively quiet, start to the week. We're very, very quiet. We're going to mark the support right. You can see right here. We're just trying to hold this area here, which is 21.58. So we'll mark that as our support. And resistance right now is going to be right there, 22.02. No, we had 3, so that's fine. The euro odd has found temporary support at 60.42 following a torrential downpour. A break lower moves of the market into 59.93. Resistance is 60.95, followed by 61.52. I got to give props to Amanda on this one. Wow. You know what? And I actually had, support as we came down here. Well, yeah, that is support. It's key. But I thought here on that day, I think was it Thursday, I thought we'd at least the market after this big fall would find some support in here and bounce off that. Now, eventually we did make it back up, but that's not after the market, fell even further. So I thought we'd see a nice bounce right from the 69.95. Maybe we take it out by maybe 10 or 20 pips, and then we start to see this market move on. Heck no, we just pushed it even lower. So the resistance is 16.95. Funny, because I remember being short up in here. But like I said, all my trades are so short-term oriented. But I remember having a discussion with a gentleman and who's an Aussie, and he told me, well, I'm looking for 68. He wasn't, talking smack or anything, but he just said he was looking for 68 cents. I remember telling him, I go, well, my outlook is much more short-term oriented, but I mentioned it because we'd already thought we were going to run out of gas down here. We made another one, and I remember what fibs and what else was up in here. But I remember being short up in here. I don't even remember the exact number. I think it might have been like 64.40 or something like that. But I remember it's hard to believe now. Look at this, how much we've fallen. Let's go to the Euro Kiwi. But I never would have thought it would have fallen like this. That's what I'm saying. Got to give props to Amanda for hanging on to that and staying with it. Okay, on the Euro Kiwi is attempted to regain major level 69.42 after a heavy fall. A break above should allow for a test of 70.53. Bears may take a pause, but have their eyes set on 67.47. So you can see right here that resistance of the 69.42. As I said, for the start of the week, we like to hang on to these bigger levels. So there we are. We'll go with 69.42. And we're going to flip this back to bearish. And support here, 68.51. I'll just see if there's something a little bit closer on the... No, it's going to be... Actually, it's even lower here, but there's 68.58 here. Right there. 68.58. And with that, we'll move into the Aussie yen. And as I mentioned, we're in a very, very quiet start to the week, so we're blazing through some of this analysis because it's just that, plain old quiet. We don't have any real data. We did have the German industrial index, German industrial production numbers. We had Centix probably just a few moments ago, may not have impacted the market much. And then we don't really have anything once we get into the States of any real noteworthiness. We do have... you see employment trends. I'm showing that. So things may come in, and we're seeing that right now with the cash dollar index come in a little bit as we get closer towards Wednesday to take into that risk, considering how far we've had a pretty good run in the cash dollar index from NFP. So looking at the Aussie yen is quietly marking time between 75.31 and 76.19. EMAs are flat as the market lacks momentum. Last few days, range is barely 50 pips. So the key is 76.19 and a little bit lower. It's really 75.48. So we'll say 76.19, 75.48. And we'll keep that 47 there. And with that, we'll move into the guppy. Oh, well, below this key 3602, you can see that. And we said Guppy has secured 3 daily closes below the key level of 3602. Bears close to the next target, which is 3460 of 78% of 3071 to 4889. The pair needs a close above 3736 to slow the downside momentum. Let's take a look on intraday, but you can see this. This market really wants to push lower. And probably not going to be, as I mentioned, bears really aren't going to be satisfied probably until we make a move. We can make a move down here at 3460. On a very short-term basis, let's see how that stacks up. There we go, right here. So support is going to be 35.26. I'm trying to make a stand here. We can probably move this a little bit higher at on a short-term basis of 35.48. And on the upside, 36.13. Or 14, that'll be fine. Lastly, we'll look at the sterling odd. Sterling odd attempting to make a stand at support level of 78.73. Confluence was 78.47, which is a 61% back of 72.08 to 88.85. Initial upside resistance is 80.13, followed by a major level of 80.89. A break to new lows will challenge the 76.78. So let's take a look at it on an intraday basis to find that support and resistance. For right now, on a very, very short-term basis, it's going to be 79.50. Let's go 79.50 and 78.82. So you can see here we're just kind of barely easing back a little bit of a downside, you know, on the cash dollar index. Obviously the euro, and just barely higher, but it is, you know, trying to work a little bit higher. Once again, I think that we'll kind of pair back in as we get a little bit closer towards Wednesday. We don't have any real data coming out here in the States, so very, very quiet to say the very least. And there's a bias chart. I'll get that posted. And thanks for joining us here on the European crossover.